This is Alan Bush with ADMIS. In the stock index futures, we are seeing prices higher this morning, buoyed by better than anticipated German industrial data. Also, we had Chinese import and export numbers coming in better than expected. So that's supporting futures. Also, we did have some negative consumer credit reports yesterday, with that number growing actually much smaller than anticipated. So far, it looks like that bearish news has been shrugged off, as today we focus on the Chinese and European economic data. As far as earnings is concerned, we are near the end of earnings season. Most companies in the S&P are showing better than anticipated earnings. However, a slight majority are showing weaker than expected revenues. Overall, it still looks like the Fed's quantitative easing program is dominating, and once again, stock index futures are higher mainly on Fed accommodation. Over to currencies, seeing the euro currency higher with those better than expected German economic numbers. Also, we have the pound higher, even though we did have weak retail sales in the UK. Better than expected Chinese numbers helping the Australian dollar, but it looks like a lot of those gains have been given back now. We feel that the Australian dollar will trade lower from these current higher levels, so look for a weak close in the Australian dollar. Also, the long-term trend for the Aussie dollar still appears to be lower. And in the Japanese yen, futures a little bit better, still holding the 100 yen to the dollar support area. However, we feel that this support will be breached in the next week or two. So look for lower from here in the yen and lower from here in the Australian dollar. Over in the credit markets, actually seeing higher prices this morning, even though we did have yesterday's note auction coming in about as expected. We have another offering today, and then tomorrow we have the 30-year bond offering. We feel once these auctions are out of the way, the bull market can resume in the Treasury futures market. Still feeling that the global economy is slowing, and that should be the dominant influence to take the credit futures market higher in the longer term. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.
Let me double check. I don't know if they're able to do that.